we're moving to an environment that has a 5.395% income tax. That's okay, because, you know, services require tax dollars, and we understand that. But the state of Washington went from 0 to 9.9 in a very short period of time, and you know, if that still stands up, and the concern we have is as the legislature kind of continues, you know, tilting in the direction that it is as a reaction to what's going on in the federal government, we're really concerned that that's going to continue, because that money's spent, that it's going to get worse and worse. And so we see that as the beginning, not the end. You know, for us, things like the estate tax, we're a pass-through entity. The estate tax, yeah, there's a lot of machinations that we go through to protect that. We do not want to find the death of a shareholder driving the liquidation of the company to essentially pay an estate tax that was thrust upon us, you know, with little to no notice, on top of what we were planning for at the federal government level. Because the person who's going to buy Pearson Packaging Systems is not going to be engaging in stakeholder capitalism, and we can probably talk about that later. They're going to be engaged in shareholder-based capitalism, which is an entirely different animal. Those profits are going to be swept out of the state of Washington to Chicago, to New York, to LA. You know, it's those types of things that harm what I would say small to medium-sized businesses that are really trying to grow, that want to retain their independence, their private ownership, and their mission and purpose-driven reason for really, you know, being an employer. And so those are some of the reasons. So I would say it's that lack of predictability. There's a lot of different things and again, it's the predicted unpredictability, right, that we think we're going to see going forward, and we've started that process to move as a result of it.